Just a few more moments here. We'll give others time to arrive. Glad to see all of you here who could make it tonight as we kick off a new school year and people begin coming back and warming up to the investment world. Okay, let's go ahead and get started. Good evening, everyone. I'd like to again welcome everyone to our successful investing webinar here at Stock Market Companion. For housekeeping purposes, I'd like to remind everyone that we are a provider of very high quality stock market information, individual stock analysis, and market analysis, in-depth study. We cannot, however, know the investment suitability of these individual stocks or the individual indices for subscribers, so we have purposefully decided not to have any licensing behind our names for this operation, and therefore we will not accept liability for any actions taken on the basis of what we discussed tonight. We are all enthusiasts, and I encourage you all to ask as many questions as possible tonight and see if we can make some progress on some investing ideas, and ultimately for everyone possible to multiply their assets using stocks. But again, we can accept no liability here at Stock Market Companion for what we discussed tonight or our other publications. Let's move forward. One more time, sound check. Sound check. Quick chat from anyone who can chat and say that they're receiving loud and clear. Sound check. Excellent. Thank you. Thank you, Chris. Thank you, Roger's family. Okay, excellent. Let's proceed and look at our roadmap, the S&P 500. That's what you see right now on the screen. And what we have is a very turbulent condition currently. Following my pointer here, I'm using the pointer, and based on our, let's pull back a little bit here on this, where you see my pointer now, this is the May 2nd high, and this was the pivot point for the overall market. We have now retraced down through the August time frame here, when you see again this this line segment with the minus 18.9% number here adjacent to it. You see that our retracement has reached a maximum at this point of minus 18.9%. Today's close is right here where I have my pointer. And so what you're seeing here is again a very turbulent condition, and you're seeing a bottoming, what we hope to be a bottoming condition evolving here in the marketplace. You can see I've put in this short-term trend line here where my pointer is now pointing, and we've picked up the very bottom tails on these, the wicks on these significant down days. Even today, the market opened very weak this morning due to trouble over in Europe, increasing concern as the weekend was concluded. There was a G7 meeting this weekend overseas, and there was no nothing really spoken about the situation in Greece and the other European rim nations that are having trouble with their sovereign debt and their yields going through the roof, and their lending rates going through the roof on their bonds. Today we learned that Italy is issuing bonds today at a premium about $4 billion worth of bonds in order to fund their near-term debt, taking that action today in spite of very high yields, high costs for them to access that capital. And what that is telling us is several things. First, that they found someone who was able to buy the bonds, which is excellent. That's good. Unfortunately, the yields are very high historically for Italy, and that's saying that there's yes, there's demand for the bonds, but we have at a premium for Italy. And at the same time, it says that Italy wants to get that money now because they don't know what the costs are going to be going ahead. If Greece defaults, as many are forecasting, the trouble with for Italy and other rim European nations that need to access that capital, there may be a period of time that capital is simply not available. So we're seeing actions taking place today that substantiate the concern that we're seeing in Europe and then globally in investment as all of us wonder what's going to happen next with the euro, what's going to happen next in Europe relative to this subject. We know that there could be a tremendous chain reaction involving European banks if there was a default on Greek debt, that the Greek government said that they would no longer honor their bond obligations. Every European knows that the European banks are heavily involved with that business, and there may be a run on the different large banks in Europe. Let's say Deutsche Bank, and that would lead to very unpredictable consequences. So that's why we're seeing this this trouble. As we go forward here, this uncertainty. No one knows what the outcome will be ultimately if there is a default by Greece. We have heard this midweek last week that the German government is working on some form of plans to perhaps protect their banks in such a situation, perhaps have lines of credit immediately available or discount windows available for them that would take some of the edge off of that highly critical environment, just like our Federal Reserve was able to do in 2009 and in the March and February timeframe back then. So that's causing a lot of concern. Be sure to ask questions as we go forward. Our purpose here is to make sure that this is a very high-value event. That means questions, any questions that you have that we can possibly answer, we will. So please feel free throughout our presentation here to present your questions. Okay, let's move forward now, looking technically at the S&P 500. What got us talking a little bit about Europe this evening was the fact that our S&P 500 started out very weak today. The Dow was down approximately 150 points this morning, and then we saw the markets gain strength throughout the day, and then into the final 3/4 of an hour, we had the markets close very strongly positive, which is a great development for us near term. You can see on this candlestick where my pointer is pointing that the market closed basically at the highs of today. We have a very orderly, in spite of this turbulent environment down here where our maximum pullback is roughly 19%. We're now at a pullback of roughly 15%. And we have here a trend line that is basically holding this higher low that we posted here on the 23rd of August. We have this, actually this higher low occurring the day before. On the 22nd of August, a higher low meaning we've got this bottoming effect taking place where you see my pointer and you see here these lows in this area. Here is the close, this hammer down close on the 8th of August. We had a very strong pull back the next day, the next market day, and then a close very high on that day. We had then a pushback where you see my pointer here again taking back all of these gains and then closing down here very low on the 10th. Again, another pushback higher, so very turbulent time. This is when you're hearing in the news or seeing on your through your own data providers, plus 300 days on the Dow, minus 300 days on the Dow. This is that back and forth seesawing motion that we were experiencing in early August. And then we had this this emergence from that difficult time, and then we had immediately this pullback down. But then on the 23rd of August, what we have is this pushback higher on what you see down here on our volume chart, on above average volume for the market, above this previous day. Again, my pointer is now down here at these on these volume bars, and you can see a very modest accumulation day, but an accumulation day nonetheless, where we have a higher volume day and a higher close than the previous day here on the 23rd. This day on the 23rd of August, this is our confirmation day that puts our market in a confirmed uptrend off of this recent bottom here on August 8th. So we are in, based on this tenuous but still significant August 23rd day, we have a confirmed uptrend. Okay, and our trend line here is able to so far substantiate this. Now I will say this. We have many charts that are validating this this development and showing some very good characteristics, and we'll cover those tonight. But I will say this, that if something happens in Greece that leads to more unpredictability over there, this trend line will have perhaps absolutely no value, and we will find this market plummeting through these recent lows and perhaps challenging. Now I'm moving my cursor back over here to the September 2010 lows. It's very possible that we would have a retracement down to these levels. So our areas of support we can put them in here with these horizontal lines very quickly and say these would be areas of support, where I'm pointing with the pointer now. Again, the first line of support would be these recent lows, the hammer down low from the early August time frame, and then we would have ultimately this candle, this wick low down here would be a support area, and then we would have a support area going back to this breakout time frame from September 2010, and then ultimately these late August 2010, that's last year, lows. These lows were put in just before the announcement of QE2 by the Federal Reserve, and are very significant lows. And it's completely possible that in a situation of more unsettling, or as Federal Reserve Chairman Mr. Bernanke says, credit event, if that would happen in Europe, we would most certainly be testing these near-term support areas. Okay, so that to the broader market. Again, we know that there are the reason why we're having these this trend line hold off of this higher low is the fact that many investors are seeing, as we are seeing at Stock Market Companion, very compelling value in some individual stocks. We're seeing a lot of CEOs and let's call them operation level management, and also on the director level, we're seeing significant insider buying activity taking place, which we've reported in our 15-minute market update and identify very clearly in a list of certain stocks that we're looking at. So we're partnering up with these operational level high managers, seeing also value in their individual stocks. Purchases that we haven't seen in several years since the 2009 lows. So we're in this very strongly with Stock Market Companion. We've committed 60% of our investment capital at this point down at these triggering off of this higher low. We've engaged this market very aggressively. So we are we're in this expecting a move higher, but we recognize that we are also at a very tenuous place with these European developments and a credit risk, and therefore we put in our hard stops there in our 15-minute market update that we published on Friday on Bank of America, Ford, WFR, and BAC. Okay. So let's move forward. Any questions on the broader market? Let's take questions on the broader market at this point in time, or simply move on when everyone's clear on this this picture of the broader market. Again, you can see here on a little bit broader scale this very orderly push higher from the announcement of QE2. Again, I'm looking for questions here to see if I can answer any questions before we move forward. Okay, looks like we're all set. Let's go ahead. Let's move on to something that we talked about today in today's 15-minute market update. Let's talk about the semiconductors. Let's start with Intel. What we have here is a very good-looking chart as we zoom in. On Intel, we have here a very promising development on the daily here. You see here also the higher lows forming, offering investors something to see, a very clear backstop for perhaps participating in Intel. Intel is in our stock market companion 15-minute stock watch list because they have executed so well. Their margins are excellent. They print money with their chips. Management is excellent, but they have absolutely not been rewarded for their hard work at this company. Yet we see here some nibbling going on these recent lows. We have again. Very similar to our broader market, a higher low formation here that is holding up rather well. And we have here today a very nice push higher that gave some encouragement to those who are keeping an eye, as we do, on the semiconductor space, saying, look, there's some tire kicking taking place here in the semis. Okay, what does our volume, however, look like on these? On this development? Well, we're seeing here just as you look to the lower part of my screen, you can see my pointer down here. Here's the 23rd of August, the pivot point for the market where we had the confirmation day of this current or uptrend that we are in off of these recent lows. We have here also on Intel a little bit higher volume than before, but still not cresting at all above this white line here that you see down here on this volume chart. This white line is our 50-day moving average on volume. You can see our volume not coming above the 50-day moving average and not coming close to these very significant down volume days. Negative days on very high volume that we're seeing here in the mid-August time frame. Our accumulation days, this is a very modest accumulation day on the 23rd. Also very modestly here. We're just today also a nice move on price, but finicky investors or conservative investors could in all fairness say, hey, look, where's the volume? Obviously, we don't have the volume like we see back here in the April time frame that had us also very interested here. You can see over here in the April time frame this tremendous gap up on earnings that Intel presented shareholders, and this very nice move higher. Let's zoom out on this so that you can have a little bit more of a bird's eye view. This Intel chart is very interesting because we can go back and see the memory that this chart and this stock has exhibited over time. Here we are showing a nice horizontal line right at these. I've got my pointer here on the June 2010 highs. We were very attentive to these highs back in the February and March timeframe as we came up here in December, tagging those very same June 2010 highs, tagging them in December. The stock falling back down and then coming back up here in the February timeframe, tagging them again. We entered in right on this day as in anticipation of a possible very strong thrust higher here on Intel, on the individual stock. We were anticipating move higher in this time frame. We got on board the very next day. We took our money off just above the 22 area, sending out an alert, and sure enough, the market pulled back strongly. Intel with it. Intel came back up here in the early March time frame to try its move above that line again, and ultimately failed, coming back down to the ultimately to these 19 to this 19 area. In a very fast pullback, completely taking apart this resistance line that when Intel breaks through it would be very interesting. Then we see here this push higher on earnings on Intel, an ultimate push higher through these through this resistance line. That in days past and in years past would have provided a very nice backdrop to a very predictable investment in Intel, still not holding up under this market pressure that we've experienced over these last months since the May 2nd highs that we see here. We see Intel coming back down and testing these low 19 areas, and now recovering off of this. These higher lows where the market is trying to find a bottom, what we would say based on very attractive stock valuation levels. Okay, any question on Intel before we move on? Okay, Intel being a wonderful bellwether for us as we consider other semiconductors. We shared today in our 15-minute market update a very attractive development taking place in NVIDIA, thanks to subscriber friend Wayne, sending an email today and asking very point blank, hey, this looks like a very good development here on NVIDIA. Are we still tracking it at Stock Market Companion? What do we think? Our response back to subscriber friend Wayne was, yes, this looks very good. This is a pattern that we're seeing across the board on many tech stocks and other stocks that we're interested in. This is a very nice setup here for NVIDIA. And let's see if we can bring up. Well, let's see. Let's see if we can bring up here. Okay, let's bring up today's market update and see what we're talking about here about NVIDIA. And we were contrasting NVIDIA and its very interesting development versus Steel Dynamics down here in our story stock investing section. Steel Dynamics came out with earnings after the close today. Here we're down here. I'll highlight this. See if it comes up here on the screen quickly. Yes, okay. Steel Dynamics guidance statement. Look, hey, despite the continuation of relatively low service center inventory levels, hey, they've been able to keep their inventory levels down, which is excellent management, excellent execution at Steel Dynamics. However, they're not seeing, they don't have an ability here to hold price. and demand has not increased in the July and August timeframe. Now, this when we talk about flat rolled steel, what we want you to be thinking about is automotive manufacturing. Steel Dynamics is a very strong supplier to the automotive industry, and when flat rolled steel is not in demand, we can correlate that with in our minds with the automotive industry, and that's why we're seeing also weakness in our stock market companion holding Ford. That hey, demand is just not increasing beyond the existing demand level, but we do know at the same time that for instance, in the case of Ford, that Ford is doing a very good job adjusting to existing demand and paying down their debt, and simply executing across all areas of operation in a very significant way. But we are reading these things. Steel Dynamics is a good example about what's happening in the flat steel area and drawing some conclusions. Now, let's look in contrast now to NVIDIA. NVIDIA, in contrast, is saying, hey, look, our 2013 revenues are improving, and you know, at a 300 million to a 500 million increase in revenue above what was forecast. So that's a you know, that's a 10% gain on possible, you know, 10% gain on revenue that NVIDIA is steering towards. And here we see the CEO making a very strong statement. Hey, we see growth across our entire GPU and mobile processor business. And hey, everyone, look, the future for computing is visual. We know that. When he says visual, we know about the smartphone development. We've been all over that at Stock Market Companion, and combining that, of course, talking as well about the same thing in terms of mobile computing, whether it's the smartphone or the iPad-like devices, tablet PCs. That's where the growth is in the PC environment, and NVIDIA has a very significant place with that in the Android market. So we'll just have to see if NVIDIA can do something here. Let me see if I can make sure that we get the okay, question. Would you hold Intel for the long term just for the dividends? Very, very good question. Let's talk a minute about that. Let's go ahead and bring up a here's a very interesting site for those of you interested in insider information. This is an area to see about insider purchases. SECforum4.com is interesting, very interesting. We can also see that information over here at www.finviz. Let's share some together here about different places where you can get very interesting information about certain stocks. We can see here on the Finviz homepage, as we scroll down, we can see here also, let's see if this populates quickly and I can share quickly with my pointer. You can see here top insider trading information taking place down here where they have the ticker, and latest insider information here. This is a wealth of information here at Finviz, and it's free. Okay, let's talk about Intel's dividend. You know, at a 4.3 here, we've brought up very quickly finance.yahoo. That is without the www at the front end of that. That is finance.yahoo.com. It's a very helpful source to quickly see in a bird's eye glance some of these key characteristics or statistics. Here we have a dividend and yield information on Intel, 4.3%. You know, I think Chris, that this is a very for someone who was looking for a very strong underlying stock, a very strong company with very strong earnings, and a 4.3% yield. You know, I have a I would not be opposed to holding Intel for the dividend alone, and I think that the chart is telling us that there's upside in stock price appreciation to boot. So I think that's a very valid investment proposition. And in the spirit of brainstorming here at in this webinar, again, not to be held liable for this type of very candid discussion, but I think anybody with the investment suitability for individual stocks looking for individual stock dividends, that this is a very attractive one. Let's go back and look at the chart. There's all kinds of things that stock investors can do with Intel, particularly when we see that they have done such a good job on earnings. And we see that back here in this late April time frame. We see this gap up on earnings. Intel's done a very good job on earnings. We know that the PC environment is transitioning. That is perhaps something to keep in mind when considering the suitability of an investment of Intel due to the dividend. But we know that Intel is a very strong participant, and the PC market is not going away. It is transitioning into with the very significant development of the tablet PC product line across all manufacturers. But we know that PC manufacturing, I mean, 1 million units a day, it's a very significant business, and Intel has guided higher for, I believe Intel has guided higher back here in April for the 2013 timeframe. That would be something to check. But I think buying Intel here and having some prudent stops in place just in case things get out of hand because of a credit event overseas is for the for a investor very suitable. A 4.2% dividend yield. Let's say that an investor was able to get Intel at roughly $20 minus 4.2%. That would give just the dividend alone gives that if you're paying $20, if an investor is paying $20 for the stock, that 4.2 or 4.5% dividend yield provides some insulation to the downside to 19.16, which would be recent lows. So I think that's a very, very interesting proposition, not to be overlooked. I mean, where else can someone go for that type of yield on their money? Okay, any other questions on Intel? Let's continue forward. NVIDIA, we've already taken a lot of time here. NVIDIA, this setup, you can see this very attractive setup taking place here. Let's call it as quickly as we can a nice W formation taking place here. A very attractive pattern here emerging with NVIDIA. I mean, really, this is excellent. The only problem is we get a very attractive development like this, and then a person puts assets on this, and then you wake up the next day and we find out that that Athens fell off the planet. That would be very disturbing. But this is a very attractive development. Okay. So NVIDIA, very orderly pullback here on this recent on this pullback. I mean, consider this pullback in light of a minus 300-point day on Friday and some of the turbulence last week. As quickly as investors could discern that the environment may be suitable for getting back on board, they chose NVIDIA. So this looks very interesting. What would be some logical targets? on something like this? Well, clearly the stock has to press up above these recent highs here, these intraday highs. Let me see if I can zoom in on this a little bit better. These intraday highs on this day, I've got so many things on this chart, it's going to be harder to get that, but roughly at 1470, roughly. Let's see what our intraday high was. Yes, 1464 on 9/7 was our intraday high for NVIDIA. Today, NVIDIA is closed at 1421. This is a very attractive entry point under normal circumstances, but unfortunately we have this terrible uncertainty overseas. Okay, which is why, already with our commitments here at Stock Market Companion on our investment accounts with Ford and BAC and Apple, etc., Wafer, we have to keep some of our powder dry just in case we do get a significant drop in the market that we can then take advantage of some more lows. The next a very reasonable target would be this area. Let's get a intraday high on this one at 1632. So let's say an individual was able to get in at 1450 plus 16.32. That's a 1.82 advance divided by 14.3. I mean, that's close to a 13% run just in a run up to these recent highs. Clearly in the realm of possibility for NVIDIA. And consider, I think some of this NVIDIA trouble has perhaps been related to the trouble that Samsung has been having with Apple's power position on the iPad and the challenges that Apple has presented in the courts for Samsung's Galaxy products overseas. It's been enormous to see Apple's execution not only from a product development standpoint and a production standpoint, meeting all the tremendous demand for their product, but then also opening up a new front and pushing on on competitors in the courtroom. I mean, Apple is hitting absolutely on all cylinders. That's why we're on board that stock. Shutting down Samsung, the nearest competitor on the iPad product, absolutely destroying Hewlett-Packard's entry in that space. That's put pressure on the Android environment, and we're seeing that. Perhaps that's what we're seeing here, reflected here in the NVIDIA chart. And then we have NVIDIA's CEO saying, yes, okay. Not mentioning so much the pressure on the in the Android space, but we're seeing here on this earnings gap higher that the CEO is saying, hey, look, the future of computing is visual and mobile, and we're at the epicenter of it. So we're increasing our guidance for 2013. That's very good news for NVIDIA, and perhaps very valid entry opportunity here for at least a 13% run or a 12.7% run up to these recent highs. So it looks very attractive. And big thanks to subscriber friend Wayne. Wayne's attention to this development today. Okay, any questions on NVIDIA? Okay, we're covering some ground here. Pulling on this free site, Finance Yahoo, to give everyone an idea. You're welcome. You're welcome on that coverage on NVIDIA. Thank you. Okay, we have here NVIDIA. Here to contrast that very interesting idea of an investment in Intel versus NVIDIA. NVIDIA doesn't offer a dividend. And so we see here very quickly on this bird's eye view on a free website, look, the dividend yield on NVIDIA doesn't exist. Therefore, investors are looking at strictly share price appreciation. Okay. What we saw from a technical basis is it's perhaps a very suitable investment. Perhaps that the Intel investment being also very interesting relative to share price appreciation and dividend yield, and that dividend yield providing a little bit of insulation on a possible downside movement in the market if there was a credit event to take place overseas. Okay, let's use some of our time. Let's go quickly through our holdings. Bank of America bobbing up and down here in the low 7 area. It is what it is. Not what we like. We would like to have seen a continuation move higher off of this from this area right here. We would have liked to have seen a move higher right where I placed this arrow. We didn't get it. We got this pullback. Okay, that's the situation we have, and we're living with it. We've gone ahead and put our ultimate stop, well below to give this stock some room to breathe. There's all sorts of news that we're picking up on Bank of America throughout the day. We know that Bank of America is embarking on a very aggressive restructuring program, and ultimately, we believe they're going to be successful, and other investors, notably Warren Buffett, believing similarly. Okay, but we also know that Warren Buffett's investment in Goldman Sachs back in 2008 provided only a brief respite to the market before the bottom fell out on Goldman. I get this to pan back here. Goldman Sachs here in the late August time frame. I'm sorry, in the late 2008 time frame. We had. Let me see if I can zoom in on that a little bit better. That's just a little too scrunched up. Okay, we have this accordion action in this September time frame. 2008. This is the time frame that Warren Buffett purchased a very significant portion of Goldman Sachs, also in a preferred share investment. But then, less than a month later, or approximately a month later, the decline continued in Goldman Sachs. We had a little bit of more of a accordion action, but a lot of value here lost in Goldman Sachs for an extended period of time. Things looked very ugly, and Goldman Sachs came down here to roughly $52.48, $48 a share, and the entire finance industry shaken to its roots. Goldman Sachs along with it, and Warren Buffett's entry at 120 when the stock is down at roughly $48 a share could make an investor very, very concerned, if not wiped out, if they were in on leverage. So we're cautious as well on Bank of America, and we are holding a hard stop on Bank of America. Okay, let's go ahead and look at Ford. Ford also holding so far in these recent lows, but we have here today, here's Ford today, Ford's price development today. We're seeing much weaker action in Ford compared to the semis. But Ford also recovering off of this support line this morning. So Ford pushing back above this 10 line. We like that. So we don't like the fact that it's testing this support line again, but we are appreciative, of course, that the stock was able to move higher than 10. This is a disappointing development with Ford. Nonetheless, we don't have the attractive development happening in the share price here at Ford that we see at NVIDIA, Intel, and even Wafer looking much better here. Look how Wafer is holding these recent lows much more attractively than Ford has. Not even budging. Let's take a look here once I get this trend line put in. Wafer holding, that minus 300 point day, and Wafer holding that with a very modest gain. Folks, that is those are subtle cues for us that there is a very increasing probability in our minds, depending on whether there would be a significant disruption overseas. But if we were going to get some stability in the market, this type of development is very attractive. Look at that very nice, tight share price pattern here in the face of very significant downward spikes in the background market. This is a very attractive development. Why? Well, look at this. Look at how far Wafer's down from recent highs. I mean, if Wafer was to get going at all, a reasonable target would be something in here. First target maybe. Okay, let's be realistic and just say first target here at 850. Next target would be here at these. What was a very important support area that they ultimately failed to hold as we entered into this June time frame. As the market entered into the June time frame, Wafer 2 fell off the planet, and now we have this attractive share price or share accumulation taking place here. My pointer now down here in the volume. Look at all this tremendous upside volume down here. Look at this slight but noticeable increase in the moving average, the 50-day moving average on volume down here. This is very attractive. We have a noticeable volume expansion on very strong volume. We have a stock that's holding its recent trend line lows, holding its recent higher low. We've got the CEO, the CFO, other managers who are required to report their insider purchases, all getting on board the stock, VPs at different divisions of the company getting on board, and the stock holding on when the market's coming apart. That's a very attractive development for us. So, a 665 close today, and let's take a look at what are the lows here. 919 minus 6.65 divided by 6.65. That's a 38% run. If Wafer was to get going, that in itself, from this point here, and I know this is zoomed out a bit so that you can't see it quite so clearly. Let's move in a little bit better. This move from today's share price at close at 665 to 919, that's a 38% run that's possible. Let's carry on with this. This is perhaps one of those stocks that we can put in our category of a possible mover from the mid single digits of 5 and 6 up to this ultimately to possibly a 15 area. Now I know that sounds unrealistic for some people who are perhaps new to individual stock investing, but this stock has that type of moving power. That's why we're very interested in this. That's why we're sitting on this with a 15% holding, even though the market is very turbulent here. This just has lots of potential. Look how that 15 line is roughly right in the center of all this consolidation. If Wafer can pull itself together and just simply move up to its recent 2009 and forward consolidation, that's a tremendous run for the stock. Let's take a look at that. Let's call this consolidation roughly See if I can get this accurately without touching that trend line. Well, let's just call it 1530. 1530 minus 665 divided by 665. That's a 130% run that would be quite feasible, and that's why these insiders are buying the shares. Yes, price clues from this this insider buying. The insider buying was taking place down in these, I believe, in these lower 5 areas to 590. Even I don't remember anymore here off the top of my head if there was a 6 in the number when the insiders were buying, but it had at least a 5 in the number up to that 585, 580 area. So we're above the recent insider buying, but hey, they weren't buying simply for a buck. They're buying because they're looking also at quite possibly a very strongly oversold condition on an important on their own stock, and quite possibly a run that would be feasible up until this into this historic, very significant consolidation area around the 1530 area. Very conceivable. What gives it more? What makes it even that much more conceivable? Let's look at wafer from a longer term perspective. Wafer was at one time here in the recent past very close to $100 in price. That's remarkable. We have what was a high of 96.08 or a close in this time frame of 2007 before the in December of 07, which was after the market peaked in October of 2007. We had wafer peaking at roughly 94.02. The stock is down at $5 and $6. I mean, folks, that's why these insiders are getting on board. Any questions on wafer? Again, wafer being a vertically integrated manufacturer of solar panels and in the solar space, making the wafers and the panels and holding a significant market share in that space. Okay, we'll move on now. Let's talk a little bit about Apple. For many people, the most exciting stock in the stock market universe. Here we have a very good picture of Apple, and let's say very clearly why we are on board this stock on that move above 380. Our entry recently was down here at this 316 area, roughly on, or specifically on 620. We couldn't have timed that any better. We are very thankful for that timing. We were able to get on board the stock at 316. We were able to put our stop in here at around 311 or 310.75, and our stop was not challenged, and we had this very nice run up in Apple for a 25% run in a very short period of time, and then we get this pullback. But during this time frame, we get Steve Jobs' resignation, which startled us, but it was not that we were not anticipating something. I think most investors were expecting something at some time. The announcement came on after hours on the quite probably based on this chart, quite probably just from the stock without looking at the news headlines. Quite probably at the end of the day, on the 18th of August, we had a drop down here on this day. On the following day, as more of the loose hands let go of the stock, not knowing what the stock would ultimately do, they prudently got out of the stock. The stock recovered, and then we were getting back on board right here in this time frame. We liked very much. Remember, we had the turnaround in the overall market on August 23rd. That gave us tentatively a green light to be re-engaging stocks. We were, and one of them that we picked was Apple. And so we have our turnaround day in the overall market here on the 23rd, and then we have Apple pushing higher on the 26th above our 380 threshold point that we announced in an intraday alert that proved very suitable. Apple then moving up to roughly the 390 area, coming back down in an accordion fashion, also having a rough day on last Friday. But let's look. Hey, in the context of the bigger picture on Apple, Apple is holding up extremely well to this overall market. Their recent peak, roughly 400. The stock price today, 380. I mean, that's a 20-point drop in a $400 stock. That's a 5% pullback for a growth stock. When the overall market is down 15%, that's 1/3 the overall market move on a growth stock. So Apple holding up extremely well, and here you're seeing as well this very nice pattern of Apple holding also high lows and doing a good job with this pattern from a technical standpoint here. Obviously, investors, as you can see down here with my pointer, investors not being too nervous down here as the market came apart Thursday and Friday last week. Very quiet action for Apple. We believe that now that Steve Jobs has made his intentions very clear, and we have a clearer understanding of the excellent succession plan at Apple, we believe that the overhead resistance, the resistance to the stock related to Steve Jobs is now completely removed, and this stock may begin to reflect its true value based on their close to $40 billion cash holdings and their tremendous market share gain opportunity yet ahead based on the total penetration of the Macintosh product within the PC environment and their successful quarter-on-quarter market share gains. We have every reason to believe that Apple is going higher in the spirit of brainstorming here in this webinar. We have every expectation of Apple moving higher. We'll just simply have to see. We also have, but also are prudent, and we've put in our stops. Okay, any questions on Apple or any other stock market companion holdings? Our webinar here has gone on much longer. I'll have to tighten up how I handle subjects going in the future. Any other questions? Okay. Good. We've handled perhaps all we can handle tonight. I wanted to cover a little bit on this MELA, this MELA. Let's go ahead and venture into that. Thank you for that feedback. Thank you, Chris. Our objective here is to really provide very, very high quality information at a low cost and give this vision that we've had over 25 years of investment in individual stocks on to the next generation and on to other families and individuals to see these opportunities. I mean, something like WFR or Apple and these sorts of things, these are phenomenal opportunities. When the iMac rolled out in 1997 and Steve Jobs came back a humbled man from being fired by his own organization. We made a tremendous amount of money personally on, or I made a lot of money on Apple, and that has not changed. These stories emerge, and we're able to take advantage of them and put in our stops and participate in very strong growth. It's just an opportunity that exists for those who are enthusiasts in the individual stock investment world. Okay. Now, here is MELA. Today was a bad day for MELA. Okay, I will cover those stops. BAC, the stop on BAC, originally I had at the around the 680 area. When that was opening low that day, I simply did not trigger the stop. I did not have the the stop firmly in place there for an automatic trigger, I think is what was taking place that morning when I didn't get triggered, or it didn't trigger. I was down and around the 680 area. I just said to myself, you know, I'm just not going to be stopped out on BAC. I'm sure that is for some stock market companion subscriber friends difficult to see that we did not follow through on being stopped out, but I just I still want to hold that stock for one more jolt before I let that stock go. Let's see, what is the fixed stop that we have on BAC? Let's talk about that. Let's get the right screen up here and take a look. From our 15-minute market update from Friday, we identified those hard stops. Ford Motor Company 8.80, Bank of America down at 5.80. You can see my intentions of holding as long as conceivably possible. Again, we're seeing daily reconstruction plans at Bank of America unfold. Unless there's a credit event that takes place overseas that would jolt Bank of America lower, or some sudden revelation here in the U.S. where Bank of America gets another, there's another front open against Bank of America through their exposure through Countrywide. We're just very interested in holding this one as long as we possibly can. Okay, these again are hard stops on the holdings that we have today. Wafer also, this 4.98, this would be back down at its most recent low of lows. We saw there with the chart that we're holding that as much as possible. We're holding that, what I want to say is that we're holding that well, and the trend line, the stock simply looks very good, and we don't feel at all challenged with the 4.98. We don't feel at all challenged on the 350 line on Apple, although that could happen suddenly if there was a credit event, but still Apple holding up very well. We calculated a 5% pullback in Apple versus the overall market pullback of 15%. Here we're giving ourselves a lot of room on Bank of America due to our rock bottom entry, our well-timed entry there with Warren Buffett coming in the next day, following our investment, not that he called us on the phone, of course, but the idea that we were in a day ahead of his public announcement, and then also giving Ford Motor Company as much room as we possibly can to develop here in these lows. I hope we've answered that. I've answered the question there as best I can about those stops. Okay, let's take a quick look at MELA and just go through what we like about this stock. We like its very small, very modest share count here. Again, very simple for Stock Market Companion subscriber friends to go in a free site and do some very, that's fine, Gary. You're welcome, Gary. You're welcome. I know it's awkward, particularly in the situation of Bank of America, when I talk about hard stops or a stop, in that particular case on a stop, and there is quite frankly, there should be an expectation that we're stopped out, and that was it. But in that particular case, I've just given that some room to breathe. Okay, let's talk about MELA. Here is the key stats area for MELA. I want to point out this very important threshold that growth stock investors should start getting cued in on, and that is a float of total shares outstanding 25.26 million. That is a very small amount of shares available for the general public to purchase. The final float, that is what's left to the general public, is 24.8 million shares. That's very small. 30 million is right in the epicenter of the sweet spot for some real explosive growth possibilities. This is very attractive for us when we see an announcement like we saw that they are coming through now. They have received the FDA equivalent approval overseas for their, on this day, for their melanoma detection system. A very interesting development for the stock. And we said, look, we're interested in this stock. We went through all of that analysis back last week on MELA. In the 15-minute market update, we gave the lots of perspective on that, and we gave our target entry would be on a move above this 380 line. So if this stock is able to come back up here and make a move higher, we are very interested in this stock because this has the share count, the supply that allows for tremendous share appreciation. We can tell you story after story of stocks that we have participated, that I have participated in personally, that have exploded with around the 25 and 30 million shares outstanding level. So you can see how this 380 line tracks back, has tremendous memory here. April of this this year, coming back here, December 2010. We see how this line, what's represented here in this line, we see it actually punching through very decisively and then coming back down and coming back down into Never Never Land, coming back up, testing this area, and then falling back down. So a push back up through here will have us very interested. It should come as to the surprise of no one that if you see MELA come back up to the 360 area, that we then begin preparing ourselves for an entry here above the 375, 380 area. Okay, I wanted to touch on that very briefly. Let's talk a little bit more about from this Finance Yahoo site. I just, you know, here you see the return on assets, return on equity. This is a development stage pharmaceutical company. They have all they've been doing is burning cash, so there has been no return on assets so far. Now they have a product that's going to be marketed overseas, targeting German dermatologists. So we're very interested about that. Looking at their balance sheet, we're able to see in a very quick bird's eye view where they stand. Roughly 30 million in cash. Fortunately, their burn rate was 20 million a year before that. So they've got enough cash to hold themselves for a while, but fortunately they now have their product accepted by a very significant market. What we like particularly about this balance sheet, looking at this, you see here no long-term debt. That's fantastic. No long-term debt. How about here? This column also. In their current liabilities area, no entry. No short, current, long-term debt. That's very attractive. This is very easy to read, this balance sheet, and for as long as Yahoo exists, I recommend for all subscriber friends that they become familiar with this sort of a very quick bird's eye view of a balance sheet looking specifically at debt. We talked a little bit also on our analysis last week. We talked a little bit about goodwill and the fact that here too we see a very clean balance sheet where they aren't calling out a bunch of goodwill that basically has no value. You know, if they were forced into liquidation, maybe this property and plant and equipment would have not near this value, but you know, it's also not being here overstated. $2 million in property, plant, and equipment is extremely modest. So we like how this balance sheet looks. Okay, I think for all practical purposes, we need to wrap it up for tonight and just carry on the next time we can. Here, let's say within a fortnight, within 2 weeks, we will again meet and go through as much as we can about stocks. It looks like we've handled all questions. Again, I'd like to thank all of you for coming tonight. This recording should be very good from an audio standpoint. We will be processing that tonight and hopefully have it posted on the website as our first webinar available for those who were not able to attend this webinar, for those of you who would like to review what we've talked about tonight and also review it with perhaps some people in your family that you're teaching about growth stocks. We wish you all a wonderful evening, and thank you again for your support of Stock Market Companion. Good night.